Hello again. My first video explained how you could record transactions the Pacioli way as you develop your business plan. This video is based upon my book, Understand Accounting, where I describe in a chatty and easy way how Andrew and I developed a plan for his business. I've taken some of the charts from it and will explain them to you in this video. You will be able to go to my website, understandaccounting.com, and download a copy of this plan in Excel so that you can vary some of the assumptions and see the effect yourselves. This is an overview of the planning process. The secret is really getting a lot of detail about your product, your market, production costs and so on, and putting this into a worksheet as you can see here. This is then used to produce the information that you're going to put into your planning worksheets. This is done for all 5 years, linking each worksheet to the next by the closing balance sheet, which becomes the opening balance sheet for the next year. When you've done all 5, you can extract the profit and loss accounts, cash flows and balance sheets, and do ratios, and then see whether you think your plan was a good one or not. Do you need to change this or that or the other? Well, you can do so very easily by going back to the original estimate, because they're all linked together by references, not absolute numbers, in the worksheet. Let me tell you a little bit about how the whole story in Understand Accounting came about. Andrew was made redundant. He took his redundance money and decided to set up a taxi business. And he asked me to help him develop his 5-year plan. And we meet at the local pub in order to chat about it. I take one look through the window and see his car. Absolute mess. Andy, you're not going to use that car, are you? He looked rather guilty and answered, well, no, I'm going to buy a new one. Well, what would that cost you? Oh, 20,000. And how long do you think it'll last? 5 years. Will you be able to sell it after that time? Yes, I should get about 5,000 for it, he said. Okay, so take the 20, knock off the 5, that leaves 15. Should we charge the 15 against the profits in the first year? What? That wouldn't be fair. I'm going to be using it for 5 years, can't I spread it? Yes, you can. We've got to charge that 15 over 5 years, so divide by 5 and we get a charge of 3,000 a year. That sounds more reasonable to me, he said. Now, how are we going to record that using the worksheet? Well, let's have a look at one. There we are, look. There's the money put into the worksheet. There's the purchase of the car. And we're going to now have to record a year's depreciation. That will reduce your profits, -3. How do we balance it? -3 in the car column? Let's try it. The problem with that is that over the years you're going to lose sight of how much a car cost you. Let's keep it separate in an accumulated depreciation column, which we can put on the liabilities side. There we are, with 3 in it. But I like to have that column next to the car as a minus column, because they are related, aren't they? There we are, look. Now we can see what the car cost you and how much depreciation has been charged on it. Now let's have a look at how you and I decided upon all the things you had to estimate before we could even start building the plan. Setting up Andrew's taxi business involves a lot of preliminary work. You can't just you could just enter the figures straight into the worksheets, but then you wouldn't be able to change them easily to see what would happen if, which is an important part of planning. So the next 3 slides gives you a taste of all the information that Andy and I had to get together. After we've entered them into the worksheet, we can take out the summaries, and having taken out the summaries, we can work out the ratios. Then we can say, is it a good plan? That's what it's all about. So I'm not going to talk about each one of these entries individually. You can read them. So let's move on to the next one. Here are more of the forecasts. Car purchase, the fittings, the fare miles, the miles per gallon. Notice it's very detailed. More detailed information, including you can see annual increases, because obviously it has to allow for changes as years go on. We can now use this to produce the numbers that we're going to put into the worksheets. These figures are deduced from the earlier assumptions that we've made. They're put into a separate table, and then from there they're entered into the worksheet, which we will now look at. This is the first of 5 worksheets, all linked together by the closing balance sheet of one becoming the opening balance sheet of another. I've divided this one into 3 sections to make it easier for you to follow. But you can of course always pause the video if you want to examine it in more detail. To begin with then, we put in some capital, cash and share capital. Andrew gets a bank loan, cash and bank loan. And he buys the car and the car fittings. Cash goes down and the car goes up. Then we get the opening balance sheet, the total of those numbers. So he's starting off with 20,000 in the car, he's got 2,000 of cash left, and these were financed by share capital and bank loan. Now we start to put in the items that we obtained from those previous sheets I've just shown you. The tax and insurance, the advertising, the revenue, how much was cash, how much was credit, leading us to a trial balance. Now we start to put in all the things we've had to estimate, beginning with depreciation, minus 3,000. We put in our estimates of accounts receivable and accounts payable, and therefore are able to deduce the amount of cash we received and the amount of cash that we paid. Finally, we transfer the profit from the profit and loss or income column and put it into the retained profit column, and it appears on the balance sheet. Now we're ready to do the second one, which I'm not going to show you, but they're all in the book. Now let's see what information we can get out of the worksheet, beginning with the income statement. Here's the forecast income statements for years 1 and 2, summarized by leaving out the detail to make it simpler to understand. The words and figures in bold are the ones that we'll use later on when we come to do ratio. The forecast income statement, of course, includes non-cash items, because that is the way accounts are prepared. So it is important to have a cash flow statement too. Let's have a look at it. In my opinion, the cash flow statement in published accounts is the most important statement in there. It's also true when you're doing your planning. You want to know how much cash came in from operations. How much did it cost you to earn that? How much came in from interest received? Therefore, how much is the gross cash you've got available? Then you have to pay your financial charges, of course. What's left is available for long-term investment. How much did you invest? Did you have the cash available for it? If not, where did you get it from? And finally, the change in cash held. It's a very important statement. Balance sheets are photographs of the position of a company at a particular moment in time. They let you see whether or not it is relying upon long-term loans. In this case, we can see that Andy Cabs has no long-term loans. However, you can only see years 1 and 2. You need to download the model to see how he gets on in years 3, 4 and 5. Now we can take those highlighted figures I mentioned earlier and work out some ratios. The gross margin, as you can see, is increasing quite nicely and steadily, but the profit margin is flattening out. The current ratio, which measures the amount of current assets it has divided by the current liabilities, is growing very steeply. Conversely, the return on capital employed is trending downwards, as is the return on equity. You'd expect the number of days allowed to the accounts receivable and accounts payable people to be steady with predicted figures, so that doesn't tell us anything. One has to ask the question, why is it that the company is profitable but tending to get less so, and also why is it that the return on capital employed is going down? But since this is a planning model, we need something called contribution, which looks at how costs will behave over time, which are fixed costs, which are variable costs. So let's look at that next. This is the information that you need in order to work out the cost behavior and the revenue behavior for Andy Cabs. The fare per mile, the petrol price, the miles per gallon, and so on. And then the fixed costs, ones that don't change with the number of miles driven. Based on this, we can then draw out contribution statements. Let's see one. This statement is miles related. It's going up at intervals of 10,000 miles and shows the revenue and the variable costs incurred at those levels. Revenue less variable costs gives you contribution. When you deduct the fixed costs, you get the profit. Now let us look at that as a graph. The three lines on this break-even chart show us the revenue, the total costs, and the fixed costs. The point at which the total revenue and total costs cross is the break-even point. So it's obvious that Andy has got to do at least 18,000 miles before he even breaks even. Now let's look at the contribution chart. The blue line, the contribution, is the difference between revenue and variable cost. The other line is the fixed costs, and again they cross roughly at 18,000 miles. It's another way of looking at contribution. Both are useful. To download the Andy Cabs model, please go to understandaccounting.com, my website. Go to Products, go to Cases, and look for Andy Cabs. The book, Understand Accounting, is available on Amazon as a print-on-demand copy or as an e-book. And finally, have you watched my other videos? Patchy for the web. One word. That's all about how Pacioli described the accounting system and how it developed to what we have today. Pacioli and the Merchant, that's all about the business you'll find in The Merchant of Venice by Shakespeare. And of course, How to Succeed in Business the Pacioli Way, Part 1, which I'm sure you've seen. And I'm doing some on maths as well. Subscribe to my channel to keep an eye on when they're coming out. That's all for now. Bye! I'm sure you'll find a lot on my website to interest you. Case studies, all sorts of things. Details of me, details of Pacioli, and lots more. And do subscribe to this channel. Then you can see what extra things I'll be putting onto it. As I said, including the maths. Bye again.